Hello fellow compounders, this is part 2 of the video where we're looking at stocks that are similar to Berkshire Hathaway. I'm reviewing stocks that are in my coffee can portfolio that I own because of their Berkshire-like qualities. In this video, I'm reviewing a stock that should produce returns between 15 to 20% per year for the next 5 years. This video is for educational purposes only and should not be considered financial advice. I am not your financial advisor and you are responsible for your own financial decisions. The business I'm invested in is a Canadian company that trades on both the New York Stock Exchange and the Toronto Stock Exchange. Its name is Brookfield Corporation, ticker symbol BN. Until last year, it was known as Brookfield Asset Management. Brookfield Corporation owns and manages alternative investments, commercial property, power and infrastructure assets. Its focus is on alternative investments. Think about them as real assets that are not your traditional stocks or bonds. These include real estate, infrastructure, renewable power, private equity, and distressed credit. Real estate is made up of office and retail properties. For example, it owns the Fashion Square Mall on the Las Vegas Strip and Brookfield Place in Manhattan. Renewable power is made up of hydroelectric, wind, solar, and storage generating facilities. Infrastructure is made up of utilities, transport, energy, data infrastructure, and sustainable resource assets. And private equity is focused on business services, infrastructure services, and industrial operation. It has a global presence. However, its assets are concentrated in the US and Canada. I suggest going to their website and looking at their properties. They own iconic properties like Canary Wharf in London and the Atlantis Hotel in the Bahamas. Also, Brookfield will be funding the build-out of Intel's new chip factories in Arizona. Brookfield is led by Bruce Flatt. He's 58 years old and has been CEO since 2002. Through his 20 years as CEO, investors in Brookfield have enjoyed an average total annual return of 18.5%, almost doubling the 9.7% of the S&P 500 over the same period. Do you think that Brookfield's returns look like Berkshire's returns when Berkshire was smaller? It sure does. Bruce Flatt was an accountant just like Tom Gaynor from Markel. Did I mention that he's a Canadian? Very nice fellow and seems to be very humble. Check out this clip from a Bloomberg interview.
Look what I built, and this is incredible. Pound your chest and say, look what I built at one of the biggest companies in the world, or you don't have that personality.
Look, I would say I didn't build this. My partners and I built it, and the other 2,000 people built it. And it's not about me, and this company is going to be, what I'm most proud about is this company's going to be around far after I am, and it's going to be a great successful business.
Brookfield is a holding company with a market cap of around $57 billion, which is 12 times smaller than Berkshire Hathaway, but about 3 times the size of Markel. If you recall, at Berkshire Hathaway, Buffett and Munger's investment rules are: invest in 1, businesses that you understand; 2, with favorable long-term prospects; 3, operated by honest and competent people; and 4, that can be bought at a very attractive price. Let's look at Brookfield's investment philosophy and compare it to Berkshire's. Brookfield's philosophy is: 1, invest where we possess competitive advantage. This is clearly Berkshire's rule number 2. 2, acquire assets on a value basis to maximize return on capital. This is Berkshire's rule number 4. 3, find assets that have inherent cash flow today or soon and build sustainable cash flows to provide certainty, reduce risk, and lower the cost of capital. These are outcomes of Berkshire's rule 1, 2, and 3. And 4, recognize that superior returns often require contrarian or go against the current practice thinking. So, in order to do this, you must understand the business, which is clearly Berkshire's rule number 1. So, what we know about Brookfield is that they are value investors with an investment philosophy similar to Buffett and Munger's at Berkshire Hathaway. Brookfield's structure is a conglomerate. It has 3 main areas or business engines like Markel or Berkshire. It's business number 1, the asset management business. It's where it earns management fees from the rest of the businesses it owns. And it also charges fees to manage third parties' investments. And by the way, it recently spun off 25% of the asset management business to be a publicly traded company under the name Brookfield Asset Management. Based on Brookfield Asset Management price of $34 per share, the asset management business is worth around $55 billion. Brookfield's 75% stake is worth around $41 billion. Area 2, Insurance Solutions. It's worth around $10 billion. They provide investment options to insurance companies. And they also have their own insurance company. They recently acquired American Life Insurance. This sounds like a page taken from Berkshire's playbook, doesn't it? This is a business with a lot of growth potential. And the third area is the investment of their own capital, which is worth around $60 billion. Brookfield co-invests in the funds the asset manager manages for their investment clients. They own participation in several public entities which they manage, which are Brookfield Renewal Partners, ticker symbol BEP, Brookfield Infrastructure Partners, ticker symbol BIP, and Brookfield Business Partners, ticker symbol BBU. They also have stake in a private real estate portfolio, which used to be public and they took private. And also they own 2/3 of Oaktree Capital, which is private, which are the distressed credit managers. This is legendary Howard Marks company. Brookfield bought it in 2019. Their capital investment consists of $11 billion in renewable power and transition. These are things like solar farms. $8 billion in infrastructures, which are things like bridges and tolled highways. $4 billion in private equity, and $35 billion in real estate, which is retail, offices, and iconic buildings. All of Brookfield businesses generate stable, mostly contracted and growing revenues. They generate cash. They have high barriers to entry with a market-leading position. They are long-term or perpetual in nature, and they offer continuous opportunities to deploy capital. And they provide outside financial returns, which can be achieved with their operational excellence. The management team believes they can grow the value of the business at a 17% annual growth rate over the next 5 years. This slide comes directly from the 2022 Investors Day. The bottom line, in Brookfield Corporation, we're getting a holding company that has returned 19% per year over the past 20 years and expects to return 17% annually over the next 5 years, and possibly for longer. It is a 1/12 the size of Berkshire Hathaway and has many areas to grow. It also owns 75% of Brookfield Asset Management, which manages funds for Brookfield Corporation and third parties. Morningstar gives it a 4-star rating and a fair value estimate of around $46 per share. At $38, it is trading at a 17% discount. I'm currently adding more Brookfield to my retirement portfolio. So there you have it. 2 stocks, Markel, which we discussed in part 1, and Brookfield, which we discussed in this video. Both similar to Berkshire Hathaway. I'm a happy owner of both. Please do your own research and let me know what you think about them. One last thing. I also own stock in Brookfield Asset Management, ticker BAM, the asset manager. If you'd like me to do a video about it, let me know in the comments below. If there's enough interest, I'll do it.